morning, everyone, or I could say good evening, however you want to look at it. This is James from Dividend Stock Talk, where we talk about dividend stocks and investing in dividend stocks for monthly and weekly cash flow. Today is November 14th. Wow. To me, it's actually the 13th, Monday, because, I haven't really gone to bed yet and haven't woke up. So I don't know. Is it Monday? Is it Tuesday? It's actually Tuesday, but it's kind of really Monday because I'm going to go to bed, then I'm going to wake up. It's all thing, and then it's Tuesday again. You don't wake up twice on Tuesday. Who knows? Anyway, all that being said, it is the 14th of November, 2:50 a.m. We're going to jump in and just jump on and get to work, get busy. All right, so here we are. Going to look at two of our accounts today. We're going to look at our options account, because we did carry some stocks over the weekend and we didn't really do anything with them Monday. So we're going to jump in there and probably just get rid of them, or do a covered call, bring some cash in. I don't know. Well, we're going to look at our options account, and we're also going to look at our dividends on steroids. That's where we buy the stock ahead of time, before the EX date, before they pay out the dividend, and we go to the run-up. The run-up is where all the other investors jump in. So we like to get in 2 weeks ahead of time. And from that price, we look for that little bit of run-up where going into the dividend play, and just jump out before the dividend actually happens. Or we could collect the dividend and get the dividend, run up, and get out for a little profit. So it all depends on what you want to do. So we're going to look at both of those accounts and see where we're working. Okay, that being said, let's jump on in. All right, last week, you remember we got 8 or 9 positions, and we brought 4 into this week. As you can see, we got 2 big winners and 2 not huge losers, but losers enough. AMAT, we're just going to quickly go over that. AMAT, and what are we doing with that? All right, Applied Materials starts out the year at $28.99, which is the low of the year for Applied Materials. And basically, they went 6 months on almost straight up. Well, they paused a little bit here at $38.79, and they traded there for almost a month before heading back up again to hit a trading range of $44.97, close to the 45 area. And it appeared to stay there for 3.5, maybe 4 months before coming to rest in the $56, $57 area, which is basically the high of the year. Now we have it at 57.03 at the moment. And where are we with Applied Materials? We're going to view trades, and we're at 56. So you know what we're going to do? Instead of doing a covered call on this one, because covered call is going to tie up all our money, and yeah, we're going to get a nice little chunk. We could, you know what? Let's see what they're looking like. Okay. Now we get 4 days left, which is Tuesday, Wednesday, Thursday, Friday for the covered call, and if we sell it at 57, wow, we can get another $1.41. So we got it at 56. Okay, so we're into Applied Materials at 56. I don't know, we could sell the covered call at 57, or even 56.5. You know what? If we do 56.5, we're carrying another 50 cents from the purchase price, and then we're collecting a $1.65 premium for someone to buy it from us at 156.5, and we got it at 56. So that's a nice little profit. That's a tough call. You know what? Let's do it. Carry it in. And we got 50 contracts, so let's sell them all in. Let's see what that brings us. That brings us another $8,200. You know what? That's a nice chunk of change. Because if I sold it right now, all right, let's get out of there. Let's delete that. Let's go back here. Apply materials. Right click on this, gives me the closing order. $6.95. Now, what is that going to give me for max profit? Oh, that doesn't give me the max profit. Darn it. All right. I can't pass up $8,200 for selling something for less, just a tiny bit more than I paid for it, but less than its current price. Yeah, $8,250. But that'd be kind of like, I don't know. All right, heads off to the races. Yay! All right, back to what's next. Okay, BK. BK, we seem to be having a loss on BK because apparently we bought it. Okay. Yeah, it's just for let's first go through the motions. It starts off the year at 47.39. Trades for about 2 months in that area. Drops down for a couple of days and hits the low of the year at 43. Bounces back up to that 47 area and travels another 3.5 months at 47. And then from there, doesn't take long. It takes about another month for it to get up to the 52 trading area and go sideways, which at the high of the year at 55.10, she's been going steadily downward. Now she had 2 up days, Friday and today. Monday. Today is actually Tuesday, but Monday. Friday and Monday we had a couple of up days. And where are we with BK? We're at 52. And it's at 51.02. All right, so we're not going to be able to sell it at 52 right now. But what we could do is we could sell the covered call on BK. We bring a little bit of extra money from BK because it's just sitting there doing nothing. And I don't normally do covered calls in this trading account. This trading account is basically just for the options. Oh, look at that. You got to be kidding me. It's only worth 2 cents a share. It is what it is, right? Okay. I want to go up just a tiny bit more. Let's go 3. And what is that going to bring us in? It's going to bring us in another $150. Not glamorous, but it's still selling it for the same price I paid for it. Now remember, I collected a dividend, not the dividend. Yeah, we did. We collected a dividend on that last week. We collected a premium on selling the covered call last week, and we got a premium for selling it the covered call the week before. Now, for those of you who don't know what a covered call is, that's basically when you buy a stock and you get it at a certain price. We just so happen to have this one at 52. Okay. Then you take it, you turn around and you sell someone an option to purchase it from you for the exact same amount of money that you paid for it. And that is called premium. So you're collecting the dividend and you're collecting a premium. And if you get called out, which means somebody buys it from you, for the exact same price you paid for it. So I'm getting a weekly cash flow from this stock, even though the stock went down in price, because I bought it at 52. And now it's at 51.02. So it's down 98 cents. However, I'm not going to sell it for the loss. So my target is 52, which is the price I paid for it. But also, I'm collecting the premiums and I collected the dividend because it came right into the dividend play. I bought it before the dividend. Okay, so I got it at a little bit of a discount. Because I sold someone the put option. So they actually paid me to buy it at 52. Okay, so see if you follow me here. Let's go back. BK. We got BK at 10.28, which was what, about 3 weeks ago? Okay, so I sold the put, which means somebody paid me to buy it from them at 52. Okay, I collected the dividend. And then I sold 2 more premiums, one last week and one this week, again, to sell a stock at 52, which is the exact same price I paid for it. All right. All that being said, let's look at DWDP, Dow DuPont. All right, Dow DuPont is DWDP. All right, DWDP starts the year off at 53.46. That's the low of the year. She moved up to 58, traveled a month in the 58 area, traveled a couple of weeks in the 60 area, and then traveled, it looks like, 6 or 7 months in the $63 area before she jumps up to the 71 area, which she is in now. She also hits the high of 73.89. Now this is where she is now, 70.46, and we just so happen to have bought it at 69.50. So we're actually up $4,800 on this position. Now what we could do is we could right click on here and open up the drop down window and come to the very first one on the list that says create closing trade. And then another drop down box opens up, which gives me a couple of options. I can sell it at 69.10, which is more than I paid for it. Remember, I bought it at 68.50. Okay. So what I'm going to do is I'm going to take a look and see what the option, because where did I buy it at again? That's funny because I just looked at it and I forgot. All right, 69.50. All right, I can sell someone the exact option that I paid for. I mean, sell them an option at 87 cents per share to buy it from me for the exact same price I paid for it. Now that's going to give me a credit of $4,200. So that's an additional $4,200 and selling for the exact same price I got for it. And another kicker is I got to collect the dividend on it. It's amazing. Collect the dividend, buy it for a discount, and then resell it for a profit. Sounds like a plan to me. All right, let's do it. Off to the races. Yay! All right, so that's 2. And what's the last position? Lowe's. Now, Lowe's is kind of one of those ones that's really not going anywhere. So let's take a look at that. LOW. Lowe's starts out at the low of the year at 65. Jumps up to 72. Travels for a couple of months at 72. Jumps way up to 82. Travels for a month and a half there. Jumps up to 85 for about 3 or 4 weeks. Even hits the high of the year at 86.25. Comes back down to 76. Goes sideways. Between 74 and 76. And she actually settled in at 75.53. Now we got Lowe's at 80, so I really can't sell Lowe's at 70, at 76, 77, because it just doesn't work. Okay, so the 80s. I only have 2 of them because I have 200 shares at 15. Sell that, and I'm getting 21 bucks. It's another 21 bucks. Hey, it's pizza in a movie for one. It's free cash, So if you can afford, a couple hundred shares, fine. Free cash every week. But the interesting thing about, now 30 bucks doesn't seem like a lot of money, but you do 30 bucks every week for 52 weeks, and it just adds up for something you already bought. Now, Lowe's is a great company. It's a household name. It is a dividend king, which means for the past 50 years, they've increased their dividend. So every year, they've increased more and more money to the investors, which is a good thing. Granted, like I said, 30 bucks is not a lot of money, but if you can afford more than 200 shares, you're going to get a heck of a lot more money. Okay. All that being said, let's see where we sit at this moment in time. We're at overall profit and loss year to date, 72,000. And yeah, I'm going to have a T-Reg call is Friday, so I have to sell these things by Friday. Today being Tuesday, Monday, but Tuesday for some of you people. They're going to give me a T-rate call on this. So let's jump in to the other account and see what that one's doing. Okay. Now this account here is strictly dividends on steroids. Now that, like I told you before, where we buy the stock 10 days prior to the EX date, we look for the run-up. Now, run-up, for those of you who don't know it, let's go here for a second to explain this a little bit better. Here's your calendar in Thinkorswim. Okay, you come to Market Watch, you click on Market Watch, and then you got, quotes, alerts. So you can get an alert that say, hey, if you like IBM at, 85. When IBM hits 85, they send you an alert. The alert goes to your email, which for some of you may go right to your phone. So it's, hey, wait a minute, IBM's at 85, let me buy it. So you can set your alert up. Visualize, tell you the truth, I really haven't used it. Financial rates, really haven't used that. Thinkorswim has so many bells and whistles. I haven't used hardly any of them. I know what I need, I know what I do, and that's all I stick to. I don't really look at what else is out there, because there's so many trading strategies and so many tools and so many bells and whistles drive you nuts trying to figure out everything. So I stick to this trading strategy, and that's basically all I do. All right, back to what I was saying. The dividend calendar tells you when the stocks are going to be paying out their dividend. Okay, so today is the 14th. So yesterday, Monday, there's 27 companies that had an EX date. Basically, that means it was the last day the stock traded before the dividend was paid out. So if you wanted to collect a dividend on any of these 27 companies, you would had to have bought any one of these companies on Friday or before to be eligible to collect a dividend. Now, on these 77 companies here, if I wanted to collect any one of these dividends, I would have to have bought them on Monday, Friday, or Thursday, or whatever, before the EX date. So tomorrow, being Tuesday, when the sun comes up, if I want to collect dividends on any of these 32 companies, or these 68 companies, or these 46 companies, okay, I cut and paste all of these, I put them into my software, and the software will tell me, hey, who is in the best position to do what I want it to do in order to buy it, collect the dividend, sell it for a profit, and then move on to the next one. Because there's a misnomer or a misconception or a certain belief, whatever you want to call it, that you have to own a stock all year in order to collect a dividend. No, you have to own it for a minimum of 2 days. Okay, because the FCC says to be a registered owner of a stock, you have to go through what is called a settlement period. That means if I come up to you and say, hey, I want to buy your stock, I give you my money and you give me the stock, I don't really own it until it is registered with the corporation who issued the stock. Now, just because I buy it and I physically own it doesn't mean I legally am the registered owner, because someone has to notify the corporation. Let's see, ADM. Who is ADM? Archer Daniels Midland Company. That's a big company. Okay, Archer Daniels. You may have 1,000 shares of Archer Daniels, ADM. And I say, let me buy them from you. I give you my money, you give me your shares. Like say you have 1,000 shares in your hand. Here you go. I'm not legal owner of those shares until the corporation who issued them is notified that I am the owner, and they then take my name and put it into the corporate register as being the registered owner. So whoever gets the dividends is the person who is the registered owner with the corporation. So I could actually have the physical shares in my hand on the EX date and the date of record. But if the company doesn't know that I am the owner, I don't get the dividend. It goes to the registered owner on that date. Okay, so back to that. So Archer Daniels Midland, announced on November 2nd, which was what, 2 weeks ago, that they're going to pay out a dividend of 32 cents. Now the EX day is the 15th. That means if you wanted to collect at 32 cents per share, you would have to buy that stock or own that stock before the 15th of the month, which is Wednesday. So if I buy it tomorrow, then on Thursday, which would be the 16th, that is the date of record. That's when the corporation says, all right, who are we sending the check out to? All right, here's the check. Who am I sending it to? That is the registered owner, the person who's entitled to the dividend, okay, the date of record. And the payment date is the 7th, which is about 2 or 3 weeks later, and they write the check and they send it to me, or they just deposit it to my account, whatever. So it's very important when you, depending on what strategy you want to do, you want to collect the dividend, great, buy it before the EX date, sell it after the date of record, collect the dividend, okay? You want to collect the run-up going into the dividend. I'll give you an example. Okay, Arthur Daniels, ADM. We just figured out that ADM's announced on the 12th, and the dividend is the 15th. So if we wanted to do dividends on steroids, which is buy it 10 days prior to, let's see what 10 days prior to the 15th would be. Here's the 15th right here. 10 days prior to that would be the 31st. Okay, because you want to be out the 10th day. That's one, yeah, you go right there. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So you want to be out on by the 15th, by the close of business on the 15th, on the 14th, sorry. Because the 15th is the EX date. Okay, so that would be, we want to buy this on the 31st. So let's see what it looks like on the 31st. Okay, there we go, 31st. Now, remember, the dividend is only 32 cents. Now, we bought it at the beginning of the day, the opening of the day, which is 40.74, and we're looking to capture that 32 cents. So you take that 32 cents and you add it on to the opening of the day, which is the opening of the day. See these numbers right here? This is the opening, high, low, close. Okay, so look at this opening price. And then we're going to add 32 cents to it. So 40.74, you add the 32 cents for it, that comes to 41.06. And the high of the day, as you can see, is 41.59. So we actually got the dividends equivalents on the very same day. That means you're in, you're out, and you can still sell for profit. If you bought it for, let me think, at the opening of the day, and you add your 32 cents, which is the dividend, and that's your new target price for an exit. Now, if you just hit it, the exit, yeah, you collect the dividend. Great. Sorry, you collect the dividends equivalents, and then you're out. Now, if you did it with a stop loss, not a stop loss, a trailing stop loss, that means as the stock moves up, so doesn't the trailing stop. So as it gets closer and closer to our target price, which is the 41.06, right? 41.06, which is right here. Okay, now the stop is triggered. So, and you have the trailing stop. So as the stock price continues to go up, like it did on what day is that? On the 31st, the stop comes up also. So as she hits the high of the day at 41, high of the day, 41.59 was the high of the day. Depending on where you have your trailing stop, you can be anywhere between 2 cents, 4 cents, 8 cents, 10 cents, 20 cents, 30 cents. Whatever you have your trailing stop set at, as soon as this thing starts retracing back to the close of the day, which was 40.87, your exit would have been kicked in. Okay, do you understand what that means? Okay, so you get in at the opening of the day, which is 40.74, and your new target is 41.06. That's the opening price plus the dividend. Do you understand me? So your 41.70. 41.06 is your exit price. So as soon as this thing hits 41.06, right there, your stop loss is activated. Okay, great, I got my target. Now the trailing stop is going to go up, and when she turns to come back down again, I get out. So I'm getting my dividend, I get a little bit of a profit, and I'm out of the trade all on the same day. Does it happen with every stock? No. But the software that we've created shows you the stocks that do that. All right. All that being said, that's enough for today. I probably won't be here tomorrow because I'm heading out to buy a new car. Anyway, it happens. All right. This is James. If I have any questions, let me quickly check and see. Probably not at this time of day. No questions at this time of day. Lovely. So I am out of here, and I will check you guys hopefully tomorrow to see what's going on. You guys have a great day, and I will see you mañana.